Hello and welcome back to Crypto Lion. Here you can get the latest news and updates about the crypto market. You'll get news about Bitcoin, Ethereum, XRP, and other altcoins on this channel. All you have to do is click the subscribe button and turn on post notifications so that you know as soon as we upload a new video. Today we'll be talking about a huge bit of Bitcoin news that you can't afford to miss. Bitcoin always keeps everybody wondering what its next move will be like, but in this video, we're going to be considering Bitcoin's next move. Bitcoin has surpassed the long-awaited $20,000 price mark sometime in December 2020. This was after it flirted with the price in December 2017, and for the last month in 2020, Bitcoin finally reached this milestone. Following the recent price run-up, Bitcoin was up by about 190%. That's almost 3 times in 2020, and 93% from October to December 2020 as well. In order to properly consider Bitcoin's next move, we need to know what are the things behind this run we've seen recently. Though there is not just one simple answer to these questions, blockchain data extracted from the Bitcoin blockchain provides valuable insights highlighting the trends pushing Bitcoin past $20,000. The first one is institutional adoption. Bitcoin supporters have been anticipating institutional adoption for years, and it's finally arrived. Though this trend began a long time ago, 2020 has been the year when institutional investment in Bitcoin took off. Asset managers such as BlackRock and Fidelity have seen large amounts of their clients dive into Bitcoin. Rick Rieder, BlackRock's CIO, even went as far as stating that Bitcoin could take the place of gold to a large extent. Gold currently is an asset with an estimated market capitalization estimated between $9 to $11 trillion. This is what institutional investors refer to as a bet with asymmetric upside. Corporations such as Square, MicroStrategy, MassMutual, and Ruffer Investments have publicly disclosed Bitcoin investments in 2020. Renowned Wall Street investors such as Paul Tudor Jones and Stanley Druckenmiller have also purchased Bitcoin themselves. These are just some of the notable investors and companies that have acquired Bitcoin in 2020. By analyzing blockchain indicators, we can see that Bitcoin's trading volume has been driven by institutional investors and whales. Large transactions, those transferring over $100,000, act as a valuable proxy to institutional activity on the blockchain. The aggregate volume in large transactions has grown exceptionally throughout 2020. While certainly not every large transaction represents an institution buying, the pronounced upward trend in large transaction volume highlights the growth in Bitcoin's institutional adoption. Similarly, the average transaction on the Bitcoin blockchain has increased from around 20,000 in December 2019 to over 110,000 in December 2020. This is another bit of evidence that confirms that institutional activity has been driving Bitcoin's bull run. Bitcoin is now being considered as a store of value. Though some may have doubted Bitcoin's proposition as a store of value due to its volatility, on-chain indicators suggest that this thesis is stronger than ever. Particularly, the long-term investment horizon observed from Bitcoin's investors is pushing the narrative of digital gold forward. A core characteristic of a store of value is that it's expected to retain its worth rather than depreciate. Despite Bitcoin going through various crashes of over 50%, Bitcoin has sustained an upward trend, recovering every time. This has propelled the practice of hodling amongst Bitcoin investors. Hodlers can be categorized as people with addresses that have been holding a crypto asset for a weighted average time of over 1 year. Throughout 2020, the number of hodlers has steadily increased, even during March when Bitcoin lost half of its value following the COVID-induced panic. Another thing that's been driving Bitcoin's run is the increased use through decentralized finance. Decentralized finance, or DeFi, has been one of the fastest growing sectors in 2020. It's built on smart contract platforms such as Ethereum, and DeFi applications allow anyone to obtain financial services without having to go through a third party or custodian. These applications support cases from access to credit, to investing, and to earning passive returns on deposits. Similar to traditional savings accounts, but with much higher yields. The aggregate value deposited in DeFi protocols has grown from under $700 million in January to over $15 billion at the time of recording. A large portion of this has come from tokenized versions of Bitcoin, Wrapped BTC and Ren BTC being the most popular ones. Through these Bitcoin ERC20 tokens, Bitcoin holders are able to gain access to these decentralized financial services. For instance, they can take out a loan with WBTC as collateral or use it to provide liquidity to yield farms. In short, DeFi allows Bitcoin to be used for other financial services beyond trading and investing. This has proven to be a popular use case for Bitcoin as evidenced by the growth in WBTC. Currently, approximately 0.84% of Bitcoin's circulating supply, worth $3 billion, is locked and represented by tokens on Ethereum. While this may seem small in comparison to Bitcoin's market cap, WBTC has managed to grow by over 100-fold in 2020, and it's just getting started. Bitcoin has consolidated as a legitimate asset in 2020. Several people and institutions that have previously dismissed Bitcoin, such as Michael Saylor and JP Morgan, have reversed their stance on the cryptocurrency. This transition has been led by institutional adoption seeking to diversify and gain upside from the digital gold proposition. Bitcoin has also strengthened its proposition as a store of value, with nearly 64% of all addresses holding for over 1 year and growing continuously. Finally, the increased utility from using tokenized Bitcoin and DeFi has increased demand for the cryptocurrency beyond trading. Overall, these three trends put Bitcoin in a much more solid position than it was in 2017. These forces are expected to continue in 2021 and beyond as the crypto market continues to mature. Though Bitcoin will eventually crash again, it's already surpassed some of the wildest expectations. The price of Bitcoin has fallen from an all-time high near $42,000 to $34,500 and is currently trading at a key technical level that could define whether its uptrend has reached the top or whether there's more upside for Bitcoin. According to some analysts, the price of Bitcoin is close to Fibonacci retracement levels, which are horizontal lines that indicate where support and resistance are likely to occur. Each level is associated with a percentage based on how much of a prior move the price is retraced. Daniel Moss, a strategist at DailyFX, wrote that the cryptocurrency market has been under fire over the last few days, with Bitcoin and Ethereum both sinking lower as a wave of risk aversion sweeps across global financial markets. Moss added that over the long term, both cryptocurrencies could still go upwards, although further losses look likely in the coming days. While the Bitcoin price is still around 95% above where it was a month ago and is still far from its high of near 20,000 seen in December 2017, technical charts show its latest retracement has brought a number of support levels into focus. Chris Dvorchak, a technical analyst who writes for FX Empire, was quoted as saying Bitcoin needs to stay above $29,762, which is the halfway point between its December 11 low and its January 12 high, to avoid a drop towards the 26,000 mark. Dvorchak added that as long as the price stays above the 50 to 61.8% Fibonacci support zone, an uptrend has the best chance of continuing higher for the new high. Let's take a look at the Bitcoin charts and some predictions for the next move. This chart is the Bitcoin USD daily chart, and it shows the price of Bitcoin as well as the next expected big move. On this chart, some obvious drama is represented. Notice the word failed launch. It's used to express Bitcoin's futile effort to launch another bull run right there where we have the green rocket. Now, according to this prediction, price of Bitcoin is expected to drop back to a support level of just below the 30,000 mark. That support is where we have the yellow dotted line, and the drop is illustrated by the yellow rocket, which is heading down after a failed attempt to launch. Another support line that is visible on this chart is that red dotted line, which is at around 22,000. A fall to that depth will be a massive one and can set a lot of panic amidst investors. So Bitcoin is expected to short over the next few weeks, according to this chart. In this chart, we can see how the price of Bitcoin has been moving in recent days. This chart is a 1-hour time frame. Notice the area marked as the resistance zone. This is the upper filled rectangle with the yellow color. The zone is somewhere between 34 and 35,000. You can notice how the price tested the resistance zone some days ago and bounced back, but also very recently, we can see how the price surged past the resistance zone, shooting into a price as high as 38,000. Similarly, the support zone is there too, even though it's not labeled, and that is where you can see another filled rectangle, this time in a lower position on the chart. This support line is set at around 31,000. Also, you can see that the support zone was tested recently too, with price dropping to just below 30,000. Recent market price is just a little below the resistance zone at around 33,000, but the prediction here is that the price is going to fall back to the support level in a few days. That is very soon, so the next move, according to this prediction, is going to be in the downward direction. We've made it a duty to always warn you about the volatility in the crypto market generally, and most especially with Bitcoin, and this is why it's important for you to do your own research adequately before you invest or enter into a market position. Doing thorough research can help you make serious gains, and we strongly recommend this. We hope you've learned something from this video as we tried to show you some predictions about Bitcoin's next move, and once again, they are predictions and shouldn't be taken for more than what they are. Remember to do your own research and don't invest with borrowed money or funds that will affect your livelihood if you lose them. Don't forget to give this video a thumbs up, subscribe, share it with your friends, and turn on your post notifications. We'd like to know what you think in the comments section as well. Good luck and happy investing.